Hi, this is Randy Finney with the right side of the chart, and this is a mid-session update for Thursday, July 18th, 2024. It is 12:32 p.m. Eastern Time as I'm starting the video. Going to go over the equity markets. Got some other things to cover, but depending on how long this video goes, I suspect after I cover the main charts of the stock market, that's both the large caps and small caps, which I'm focusing on now as well. I would like to hit on the market leading stocks and just talk a little bit about the market. And if that's, video runs, much more than 20, 25 minutes, I'll just cap it there. And then in the next video, I want to do update ag input stocks. I highlighted those a couple weeks back and they're starting to look decent here. And natural gas, I want to do an update. I did give an update. Somebody asked about it yesterday, but I posted an end of day chart that wasn't complete at that time, so I'm going to do that. Gold, GDX, crude oil, all that stuff. So let me start out with the markets here, and again, we'll see how far this video goes. There's the uptrend line target hit right there. We're a little bit below right now. As I often talk about, you tend to get these things I call momentum fueled overshoots. One reason I love shorting stocks is they fall a lot faster than they rise. So just in the matter of, look at a daily chart. And we're right on the same uptrend line off the April lows on the daily. But that's 1, 2, 3, 4, 5, 6 candles have wiped out now where we're at the lows. Bring it across here. Oops, didn't want to do that. Let me put a horizontal line there and show you that, okay, so we come all the way back to the highs from June 12th. That's where we're trading on June 12th, the same level we are today. And that is what got to be almost a couple dozen of candles. So you can see, again, that's just the story of stocks. When you get these corrections, you got to be active and nimble on the short side. You can't stay too late to the party. But the profits, it's just like trading long in reverse, except on fast forward 2 or 3 times. So anyway, it's about a 5% or so drop off the highs, maybe 6% so far. And this is where, like I said, we have that potential bear flag pattern. So far, it looks like it's playing out, but again, there's a lot of support here. And so, as I mentioned, I'm going to game a bounce here, give it a little bit of room. And let me try to measure for you from the highs down to today's lows. So yeah, about a little 5.25. And again, this is the trend line on a daily chart. So what's likely to happen is an intraday pierce only to close back on or probably above the trend line. This is it, the 60-minute chart I gave you for 78.80-ish support, where I had the line of 478.81, where 478, 84, we're ticking up and down. So probably just a pierce through there. The flag showed on the futures, but not so much on the little bit here on the. You could look at it on QQQ 15-minute chart. And look, if we get another leg down today, this is the next and very good support on the 15. Why is that good support? You can see my volume of price histogram bars. There's a pretty big thin zone if I scroll here like this. Right here, this is your thin zone in here, meaning lots of traders. The really poor folks, the FOMO trade folks chased here. There's a big spike there. Then a lot of buying occurred in this range. And so that makes the bottom of that range about 474, pretty good support. And if that goes, it should be a pretty quick swoon down. At that point, the trend line will have clearly given way and we'll probably head on down here to about 464. All right, let me move that back. That's again on the 15-minute chart. Let me put those back this way I like it. And remember, this is kind of bigger picture stuff. These are the targets I gave you on June 26th right here. I gave you targets on QQQ, SPY, and NVDA, long-term targets. So again, very important that I differentiate between active trading. The active trader and me covered the trend line today, reversed along, still long. There's support below, willing to take an overshoot, and I'll give you some bounce targets in this video. Whereas the long-term trader, look, we have bearish engulfing candles, which so far have been confirmed. We haven't violated the top of those, and we've started to move impulsively lower. And we also reversed, within 1.5% of the very top end of my market top range. So to me, there's just a mountain of evidence to say that this may have marked a significant top. And like I said, we want to thrust one more time up there. It just aligns the fibs a lot better right now. we have almost perfect alignment with the fibs anyways. And what I'm talking about is these Fibonacci retracements that align with my price targets. I still have the higher upper fib starting at that point, but if I pulled it down, and I have done it on a different board, trust me on it. This is right here. You can see, is that the one? Yeah, there it is. I don't have all the targets on this chart, but these price targets here are the same as these, and they line up pretty almost perfectly with the fibs. So now, what does that mean? Well, dip buyers are going to do what dip buyers do. This is a pretty good support level, one I expected them to buy when they hit, and I think they'll buy today. And so, like I said, I think a reversal trade's in play now. And then at the right point in time, I'll be closing those longs and getting short again. Where's that? Let's talk about that. All right, let's go to a 15-minute chart on SPY. You can see, QQQ. There's positive divergence that I like to see on the 15-minute chart right there. There's a overshoot, again, probably a momentum-fueled overshoot. And then you can see here we've got resistance and a potential target there, about 482.26. This is my current and preferred bounce target. You want to just keep it very simple. I'm in and out all day long. I some days I'll flip the NQs literally a dozen or more times, in out, long, short, little micro levels, 5-minute charts. But this is where I think we can power up to, and that will be an objective level, whether we hit it today or tomorrow or early next week. Probably one of the today or tomorrow, most likely, is my guess. I'll probably gun it up here. Dip buyers are gonna, see the pullback, the drops in Apple and their beloved NVDA and all that other stuff, whatever. That would be about a 2% plus rally off the lows, or a little shy of that off the trend line. 5-minute chart, micro levels on QQQ. 482.30 was, and that was when we hit the trend line. That's my initial bounce target. Was already hit 482.30, but it's still resistance again. So 482.30, about 484.50, maybe that reaction high there. And then this is the gap right here. So I think a lot of traders, if we start to get some upside momentum today, this rally gets going, all eyes are going to be here. A lot of, but I think this is that level I just gave you on the 15, about 487, I believe. And that's, closer to 487, 487.30 here. That is most likely where, at least I'll be happy if we get that, to get a quick 1 or 2 day bounce out of it. And then, like I said, there's a myriad of other factors that go into that, which I'm going to cover in this video, including but not limited to what SPY is doing at the time, where those levels, ES, NQ, which is my preferred trading proxy, and the big market leading stocks, the Mag 7 or whatever you want to call them. All right, so let's do SPY, and then we'll do the small caps via the ETFs and maybe the futures, and then the big market leaders, and we'll wrap up. Okay, so there's your update on QQQ, SPY, the S&P 500 ETF, just a beautiful bearish rising wedge pattern, complete with divergence. I mean, we had, near term, you can just draw the wedge that way. There's your divergent high. Just like QQQ, we had one sell signal here on that initial trend line break. We back tested that initial trend line there. Secondary trend line break, remember on QQQ, just to kind of recap, back here, we put in a bearish engulfing candle. I highlighted that as an objective entry with 2 shorts that came even before it. One there, one right there, and said, stop would be a reasonable stop above the bearish engulfing. So that's what taken out, effectively that trade stopped out. And then this was the next one when I was on vacation, Italy, give you this trend line, sell signal 1, sell signal 2, and then sell signal 3. So average, and then of course the bearish engulfing, also for a position on a day trader, trend trader. So there are multiple sell signals there with an average cost somewhere in here. So that's this current trade. But again, as an active trader, you may reverse. Maybe this bear flag that I highlighted today on the NQ futures plays out for more downside. That's yet to be seen. Wouldn't shock me, as I told you before. So I'm certainly open to it. But like I said, pretty good support a little below, and plus the pattern would have mostly played out by then. Let me see if we go down. Let's just measure this out for kicks and giggles here. When you trade QQQs, one thing, you're going to get gaps. That's why the futures, you don't have the gaps, because the futures trade 24, virtually 20. They trade 23.6 or 23.5, meaning 23 hours a day. They have a shutdown period from 5 to 6 p.m. Eastern. That's it. And then they pick back up, and there's usually no gap there because it's after. And then the only time they shut down Friday evening, then pick back up on Sunday evening and resume trading again virtually around the clock. So QQQ, you can have gaps. And so a gap, point is, that's the move down in the futures is you don't see in the gap. So that would be the flagpole. You take the measured target, highest point of the flag, and you can see it's going to bring us right down in close proximity to that 490, 473, 90-ish if you want. You can get a couple reaction lows there. So that is about the max downside I see today or so. Now, if it does that, however, remember, if we get down there and we don't snap back right away, then you're going to print a daily close below this that same uptrend line off the April lows, which right now so far we're holding above. And so long and strong at the moment, guys. Let's see the SPY. Let's go back to SPY, and like I said, very similar. It's held up better. So breakdown 1, back test, breakdown 2, kind of in no man's land on my 60-minute chart, smack between. Really good support. This is that comparable uptrend line off the April lows right there. It has not been hit yet. If it does, that's another support level. The algos, both humans and machines, are likely to step in and buy. Plus good price support there around 550. Cuts both ways. That's support where the dip buyers, quote unquote, should be stepping in. If they don't, that's very bearish if they go on right through. Whether we get an initial reaction or not, that's going to be an additional sell signal on the stock market if and when. And I think it's more of a matter of when these levels break based on the posture of the charts and everything that's going on. SPY. And there's what it looks like on the daily chart. We got about halfway into my final market top range, which goes up from here about 550. I've shared this with you for a while now. 550 up to about 580. And we have this big bearish rising wedge. So when I look at on the daily chart, we're right on support as well with SPY. So to reiterate, on the more significant daily time frame, both QQQ and SPY are at the bottom of these bearish rising wedges. Now, so it's support until unless broken, probably one last hurrah off those levels, be my guess. However, it is threading the needle. It's picking up nickels in front of a steamroller. Why? These bearish rising wedges are ripe for the picking. Bearish rising wedges usually break about, give or take, about 70% towards the apex of the wedge. For those of you who remember math, high school math, and apex is where triangle where 2 points come together. That's the apex right there. So we're ripe to the breakdown point of where these wedges would normally and should normally break down. Remember, QQQ broke down from that one, but it's already broken down. So SPY is probably going to join it soon. So again, to reiterate, a long trade here is in my opinion, picking up nickels in front of a steamroller. But when you trade, if you're an active trader and you do this for a living, you're using, leverage typically. You're trading futures contracts, which are highly leveraged. Just yesterday, for example, I noticed NQ was at an even. When I looked at my monitor at one point, it was trading at exactly 20,000, even, round number. Hadn't seen that in a while. It's NQ, guys, for those of you that aren't familiar, is the tracking ETF for the NASDAQ 100 index, and you can see the area yesterday was 20,000. So the way NQ works, it is trades at a multiplier of the index. So it's the index, whatever the futures. Remember, the name implies they're futures. So right now, for example, I've been trading the September contracts. They expire September 20th. So it's kind of, there's a premium built in where where the things might be exactly like it sounds in the future when those contracts expire. This is a little bit off, but either way, it's roughly tracking the index. So the point being that just to give you an idea, and again, this is kind of a crash course 101 on futures. The multiplier is 20 on the NQs, meaning 20 times the index. So that's going to give you a net exposure of $400,000 per contract. Now, I know that's too rich for a lot of people's blood. And it's maybe, some of you, like me, might take multiple contracts of NQ. It all depends on your portfolio size. There are the MNQs. If you put the letter M in front of NQ, those are what do they call them? The micros, I think, or something like that. and it has a much smaller, I think it's 1/10 the leverage factor. So you can then trade with a net exposure of only 40,000 per contract. And it's the same exact levels because again, it's just the multiplier is lower. So when I post those NQ charts, you can do that. Now the point being that if you want to realize, again, if you trade futures, you know this. Single contract of NQ, 1% move is going to give you $4,000 of gain or losses. So, do the math on 5, 10, 20 contracts, whatever your number is. And so that explains why, as an active trader, I'll go after these little 1, 2% moves, because I don't want to give back, $10,000, $20,000 in profits. I want to turn it into $10,000, $20,000 in gains if I can do that. However, that's not for everyone. If you're new to this and you're not full time and have 100% of your focus and you're watching multiple monitors with a lot of streaming charts and different things, it's gonna be impossible. So cut your teeth on regular swing trading. It's the same premise. It's just kind of you're looking at smaller, shorter term time frames, multiple charts. A lot of different stocks, everything I'm going to go through in this video. So I gave you targets there on QQQ and SPY. Let me give you the charts there for you SPY traders. SPY's been outperforming, and I've made that very clear for the reasons that we've seen. What I think a lot of people, and it has been on face value, it's certainly been sector rotation out of tech into these guys, but I think it's going to spill over into the rest of the market soon, as I covered in yesterday's video, and stating the reasons why, of course, from a technical perspective. But SPY is this is a 15-minute chart. We broke down below this. There was 3 support levels there. We're back testing that one. So if we get rejected, which is certainly a possibility, boom, there's your next stop, 550 on SPY. Then if and when that goes, 542.50. That's just based on the 15-minute chart. You go to the 60-minute chart. This is still very much a target. Remember, QQQ hit its trend line first because it had been underperforming SPY, and so SPY will probably come down here and hit that too. And then once that goes, I've given you, again, back on the 26th of June, I laid out these long-term targets for QQQ. This is SPY. These are my longer-term targets, and NVDA as well. And so there it is. So trade the time frame you want, trade within your skill sets. And most importantly, there's a lot of, some vocal folks on the site here. And just don't be married to any one thing. The market must do this, market must do that. Stay flexible and just, realize that, the levels that we should bounce, that I always say, quote unquote, the buyer should step in, just like right now on SPY and QQQ. If they don't, that's very bearish. It'll show a complete and sudden shift in the supply-demand dynamics. They've been gobbling up every pullback, even the most minor, these little trend line breaks. I've highlighted quite a few in recent months, and they just get gobbled up. But this is an important one, much more important than any of these little minor trend line breaks that we've had recently. This is a much more significant longer-term trend line, and there it is. So, all right, that's your update on SPY. Let's talk the smallies. Smallies, mentioned just putting a short on those for both the technicals on, and we have big divergence too. I didn't highlight it the other day. Oh, we have a lot here, guys. There's a lot here. So, okay, the regional banks, which I've covered at resistance right now. The regional banks is a very large contributor, almost exclusively to this rip up here in the small caps, which put in divergent high. Remember, the smallies are still well below their previous highs all the way back from 2021. And if you look closely, I'm going to turn up my volume bars for you. You see what is a potential buying climax. You want to Google search these terms if you're not familiar with them. Buying climax is when you have, after a prolonged uptrend, again, you don't want to look off the bottom. You don't look for a buying climax here, or here, or here. We're in a big trading range. You look for a buying climax. This was the run off the October lows. Been a heck of a run. To say that it's extended is an understatement. We hit, as I've covered recently, some extreme levels on the RSI overbought. We have negative divergence. And so after you see that, especially when things go vertical, be it a stock or an index, what you look for, if you see a huge surge, as you do here in volume bars, that is quite indicative of a what we call a buying climax, and as the name implies, that's it. Climax, it's over, the end. Where you get the last of the FOMO trade longs that want to chase the rally. Guys, only time will tell if that's what it is. Sometimes you break out, it's on volume, and you keep running. I just want to say that fits the a lot of the criteria there, and it is a potential buying climax. And what does that mean? Well, in plain English, just like the bearish engulfing candles on QQQ that we had recently put in, they have the potential to mark the end of an uptrend and the beginning of a new primary downtrend. That's all. Hard stop, okay? So, I shorted it the other day at the highs, told you why. I'm going to stick with that. I covered it I kept it on. I was going to keep on the small caps on. And just before the video, I decided to just close that out again as an active trader and go net long to try to game a bounce today. But I will be back. And I want to say this too, that I think although the last couple of days NQ, which has been my biggest index short, has been vastly outperforming S&P 500 and especially the small caps, which were doing well. I do expect at this point, I think there'll be a quick rush to the exits, and I think the small caps can fall pretty quickly and possibly go toe-to-toe with the NQs and QQQ. So remember, IWM is your ETF, RTY are your futures, or they have minis as well. M2K, I think it's M as in Mary, 2K, letter, the number 2 and then K for the mini futures for the Russell. I'll get to that. Let me get you that chart here. Let's do the futures charts. We'll start with NQ. I just happen to have this 15-minute chart queued up. There's a positive divergence on the 15, potential downtrend line. So here's a sweet spot. These are the two levels. If we do get a bounce today, that I'd see, I think are quite likely for today or tomorrow. 20,072-ish on NQ, NASDAQ 100 futures, and then the top of this one, 20,162. Obviously, if that's what you're targeting, you want to sell a little shy of that, because this is where the buyers will probably step in pretty hard if we get there. And if they pop through that, then you got a downtrend line here. Let me go to a 60-minute chart for you and show you some other levels. Here's my 60-minute chart of NQ. Remember, here's the primary uptrend line I've been targeting, which has now been hit, and I'm going to take it in a little tighter for you. What we do not have here is my what I like to see when I'm swing or position trading, because I do wear multiple hats. Those long-term targets I'm still holding out for, and I've got some long-term funds in those that long-term accounts that I'm just going to ride out for the time being. And on the short side, keep those shorts. It's the active trading account I'm long in at the moment. Pretty good support right here. Nice support zone. We hit the top of it about 19,770 right there. Slight, what again I believe to be a momentum fueled overshoot. There's that potential flag right there. Bear flag, impulsive move down. To take it down, we would go down below. There's quite a bit of support. If it does break down, this is your next support zone down here. 19,390 down to 19,287, okay? But I think we'll probably bounce up here, and this is that level I showed you on the shorter term charts that I'm targeting right up here for a bounce, I think quite likely. And look, it could be more than that. Two options, by the way, guys, and I'll do this myself depending on how things are looking at the time. Number one, so if I'm targeting, move up to, I'm going to put a line there for you right now, about 20,160. Let me line it up here. One of two things, depending again how everything looks at the time. Everything is the big market leading tech stocks, the S&P, the futures, the ETFs, all that good stuff. I'll either have a hard sell limit order to book profits just before that target's hit, or what I like to do at times, if I think there might be some more upside, as we get close, just set a tight stop, just in case it does reverse there and goes back down. I get stopped out, get back a little bit of profits, but it allows the potential to keep running. I call it a runner trade. All right, so, and then where to on that? Well, I'll give you right now a downtrend line off the highs. So this would be pretty much a max bounce target, and probably we'll just use these two lines now. Let's see if I can replicate that on QQQ. QQQ 60. Got a downtrend line there. We can go there or there. Let's just pull it down here now. I clipped the top of that candle on the futures, but I see more candles here. So, and that would put us right into this gap. Traders are going to be looking, if we get in that gap, they're going to be looking for a gap backfill. And we'll be below it, and too many eyes will be on the top of the gap. So if I'm running it up, if we're in the gap and I'm still long, I'll probably book profits and even reverse back to short on that right before that trend line there. Okay, back to smallies. Did I give you the 60? No. Oh yeah, there's the 60-minute. There's that trend line that said, look, we break that, and that has been broken. God, there's a lot to cover. The VIX. Okay, remember in the beginning of the month, right here, I was covering this in a video, said I like the VIX. VIX had a divergent low. It was at support. That's a good support level. You can see on the 60-minute chart, it's great support. It was a previous low, divergent low, rallied up there. And then I highlighted again here. So the markets we already had sell signals on NQ, and the VIX has rocketed. For those of you, before I get the question, hey, Randy, I took the VXY or I trade, or I took VIX futures like you did. How come the VIX is up 36% since that low? It's up 9, right now, up about 9-10% today. But yet the futures are. Remember, this is a spot VIX. Unfortunately, you or I can't buy this. It's an index created, and all you can do is buy the futures that track the VIX, or the options that trade on the futures, or the ETNs and ETFs that then go into the futures. And unfortunately, the VIX futures, as I look right now, I'm actually closed them out today because we hit this as a price target I had here. We hit this one yesterday, and it was in the video from back here, 1472. I had slightly tweaked this one since then to 1615 to come in that reaction high and these reaction highs. And so yesterday I didn't, because I was looking for more downside closeout. But today I closed and reversed my VIX shorts. VIX futures longs, to shorts, which is effectively being bullish the market to game a bounce. So I think we pull back here and we get a bounce in the NQs, and then I will, again, more timing it to the market, but I'll re-enter, and that'll probably coincide with when, I reverse, close the longs on the NQs and go back short, and then go up to the next ride to the longer targets. There's that VXY gave you guys. There's a lot out there. This is one. This is it right here. Bullish falling wedge. It's rallied about, see, you can see off the bottom about 11.5% so far up. Now it's given up a little. So it's not up as much. And I gave you targets on the daily, didn't I? Yeah. Okay, so it's got a way to go. So this implies, look, this thing just broke out. And that's why I mentioned in the post earlier today, I'm driving with one foot on the gas pedal and one right over the brake, ready to stop and reverse, because just about all the ingredients, I've done this a long time. I've seen traded every kind of market that we've had in the last, 30, 40 years, 30 years, whatever, 25, 30. And can tell you that all the ingredients are there for a, sudden swoon down. I think it's coming probably, but not, like I said, maybe we can game a little bounce here first. But the VIX, if you're willing to sit tight on both the index shorts and the VIX, I think there's a good chance these targets are going to be hit. But don't get married to it, guys. I always say the VIX is the widow. But don't even trade the VIX if you don't know what you're doing, because it tends to, and especially long term. So if I'm wrong, if the markets are going to go to new highs, and take out the highs, especially if they're going to pop through the top of my max market top ranges, and then it just kind of my whole case for the major top deteriorates, and even to be swing short now deteriorates, you'll lose money. You're guaranteed. These are about the only investments out there that I know of that you're 100% guaranteed to lose money if you hold them long term, because they track. The VIX doesn't go down. It hits a floor. It's range bound. This is the spot VIX. But because they're trading the futures and they're rolling the futures, they have expenses. See, the VIX is where it was back in 2018, 2019. You go to a weekly chart, I go back all the way back here. And you can see this goes back to 2005 and 6, and that's where the VIX is at the low end of the range. Unfortunately, those VIX tracking ETNs and ETFs will, again, 100% over time lose money. You got to hit and run. You have to have pretty precise timing. Get in, get out. And then, of course, how? By timing it with the drops in the stock market. And one reason the VIX has been relatively, the move has been relatively muted is the VIX tracks the S&P 500, not the NASDAQ. There is a NASDAQ VIX, it's VXN, but they don't have, they don't have a lot of options for trading vehicles for it. You can trade future, but it's just more thinly traded. And again, so the VIX is much more widely traded, especially if you're going to use ETFs and ETNs. And this is what the, see, I don't even, you can see, I don't have this chart marked up much. Usually end up just trading the VIX. And in the S&P 500, I believe we'll play a game of catch up. We'll start to break down the financials, everything else. Remember, I went over a video, told you XLF, KRE, really liking that as a short right now, right in there in that my resistance zone. One of my favorite sectors right now to short. Yes, it's one of the most beloved sectors. Everyone wants to be long. That's what I do. You remember, you guys do you, I'll do me. This one I'm very short for a pullback. I was going to get some of these names out to you that I like. Here's some of my favorites right now. MTB short here at resistance 174.32. Huntington might have a little more upside, but either way, big divergence. Regions, no, CFGs, yep, Citizens Financial right at resistance. Just about all of them. This one, EWBC, East West Bank. You can see my targets, or just trade the ETF. It's so simple. This one at downtrend line resistance, WBS, Webster Financial. Okay, guys, I'm digressing. Let me get back to the markets. So IWM. I already shared, and IWM again has a very heavy weighting in the regional banks. So to be short one or long one is to be short the other. You're just probably going to get a little more outperformance, bang for your buck, shorting the banks, I believe, or even going long in a bull trend. But it cuts both ways, and of course you have more liquidity in IWM. You have futures. Another reason I like futures trade is the huge tax benefits, guys. If you're in a high tax bracket. You have tax advantages to long-term 60%, long-term 40% short-term gain kind of thing, or 60-40. Okay, let's give you something else. And what do I want to cover? We're at the 32-minute mark, so let me go over the big tech stocks, and then we'll wrap up. And I will do updates with crude oil, natural gas, gold, euro, GDX. No change in those, guys. Remember, if there's a change, I'll let you know. The update on NG was necessary, and you can see that in the comment section yesterday. It fell to it broke that key support we were at the other day, but it hit the next nice support level around $2. Good support at $2. If that goes, I don't have anything to 150. 150 is the low. It's the lowest natural gas has been in years. But do the math on that. That's a 50% or one-third, I'm sorry, one-third, about a 33% drop down. If it takes out $2, goes down to 150. But at $2 is support, there's still divergences. And if it can regain the in the bottom of that trading range, again, I'll have to get into it in the next video, then it could rip. And I still very much like it based on the long-term outlook. It's really setting up for a big move based on the constructive long-term daily charts and weekly charts. QQQ, let's go through the top components. So recap, QQQ at this April uptrend line off the lows right now, currently at testing that. Apple has clearly broken down between that wedge following the divergent high. This is what it looks like on the daily chart. Remember, yesterday I went over the weekly charts for you guys. And Apple, if I look at the weekly, it hasn't broken the way I have the trend line drawn there. But it is, again, broken down here on the daily. Microsoft broke down here. It's been nothing but selling since. Coming up on support, really good support. So, if the market drops, I gave you some near-term downside targets, which will probably bring the buyers in. And so that's about, Microsoft has about another 1.3% downside to, it's in no man's land now. So it may very well continue down to that level. NVIDIA continues to hold that key level. Remember, this is that support zone I gave you back here was hit here, top of it hit here. We've been dancing on the bottom of it recently here, so it's pinched down between this downtrend line and that key 116.78-ish support. If when it goes, which I still believe it will, we go down to my second target zone, then we go down to my third target zone. Remember, this is just the 60-minute chart, kind of relative near-term swing trading targets. Longer-term targets I gave you back when I gave you the targets on the S&P and the SPY and QQQ. These are the long-term targets here for NVIDIA, for those of you that care to kind of tuck one away and let it run, or game. Like I said, there's no reason not to game these bounces when they're highly likely. These are high probability targets where a reaction is very likely, in my opinion. And in most cases, tradable reaction. But I can only tell you if and when we get there. We come down to T2, which is about $50.28. That's going to chop the stock in more than half. 62% drop off the highs. Will they step in and buy it right now in a vacuum? I'd say absolutely, based on how good support level it is. I could probably throw up some fibs just for kicks and giggles. Let's do that and see what would it mean. I haven't done this yet, but you can see T1 comes in around the 20. Let me get that nice and tight to that. Right there. Comes in around the 23 fib. Then I have to go down. If we hit that additional target, there's a 78.6 fib that's going to come in perfectly with T3. There's a reaction low right there. And you know what? I should add, that is a reaction low. I should have had a line there anyways. And that comes right in with the 50% fib on that major reaction low. So I'll probably resequence these targets, guys. I'm going to do it now, and then I'll get a chart out to you. I'll remind you that I did that. There's a fib there, but that's no man's land. I wouldn't. That 61.8 fib doesn't really mean anything. At least from on here, I don't have any price support there. All right, back to the rest of them. NVIDIA still holding and flirting with that support. Support, like I like to say, support is support until unless broken. So back to the 60. Alphabet. Let's go to the daily at support right now, or close enough to that 178-ish support right there. So there's another reason that I'm long at the moment. I think it's a level that'll go, but it's just a matter of, and then on the weekly, solid breakdown. So this is kind of my longer term. I'm seeing these weekly breakdowns. Alphabet, that's a nice clean up trend line wedge. Very unlikely to regain that trend line, by the end of the week. And so I think we'll get the sell signals. Amazon, solid red candle below, but it's a weekly candle. So it has between now, which is 1:11 p.m. as I'm talking, up until 4 p.m. tomorrow to not only get, or to get back on there, at least get back on the trend line. It has to rally 3.5. That's not a big deal. It could do that if it wants. And if it can solidly get back above there, then what this candle is going to look like at the end of the week, it's going to look like this, that skinny part. It's going to be an intra-week break with the body closing back on or above it. And then then you don't have a breakdown on Amazon. Doesn't mean the rest of the market can't go down, but it's one less check mark for the bearish case. So again, what happens between now and tomorrow could be very telling, in my opinion. Same thing with Meta. Beautiful uptrend line. You can see it here. This trend line right here comes off the October lows. And but then you had horizontal price support. So it's bounced between, right now it's on a breakdown, but again, it's a weekly chart. So I'll revisit these. You have my word. Tomorrow I'll do an update and go over everything and show you how we're heading into the end of the week before we close. That's that 456 is good support. So, we've had breakdowns. They're pretty solid sell signals. But we're coming off we're still in a euphoric market with a lot of mania, a lot of FOMO. And so, the dip buyers, again, quote unquote, should be stepping in. And they have been stepping in here, not very aggressively so far. So 456 is a support level. We've had a reaction, 2 days of trading on it. I think it'll go. When it goes, then this is the next stop down here. You got the 200-day moving averages, which I think we're just going to shoot through, and then come on down to this price support zone. I've already covered these levels with you quite a bit, even including yesterday. Tesla, like I said, I'm really watching to see if it can print a solid close above or back down below, or even right on. If it closes on or in close enough proximity to this trend line, then it's not a breakout. You've heard me say it a bunch of times. If you have to squint, like right now, we're a little bit above it, but I wouldn't call that a solid. It's, it is a breakout. It is net bullish more than net bearish. But if we close the week back down below, it means that we ran up and failed to take that weekly trend line out on a weekly closing basis. And it'll probably send the stock down lower in the coming months, in my opinion. Unless we power up and then go ahead and break out next week or the following week or 6 weeks from now. All right. That's kind of the gist of it all. That 60-minute chart, you got a little flag type thing going here. Maybe a big bullish pennant for you bull folks out there. Too much other evidence in the market right now for me to take that breakout. I did tell you back here it was one of my favorites off this divergent low. Even back here I highlighted as a trade idea. Pop, that was a high double-digit gain. Right now, like I said, I'll revisit this one a few weeks from now if it's up here and looks like it's going higher. But for this point in time, I'm just watching, of course, all the levels I've just covered with you on the indexes and the key stocks, and seeing how Tesla closes the week. All right, let me get it out to you. 40-minute video, but plenty of time for you to watch it before the close today. You have some near-term bounce targets if that is you and you're agreeing with me that we may bounce here. And you also have the levels that, look, at this point, let me just say one more thing. We've already undercut the trend lines with that momentum fueled overshoot. And I'm going to now add a support level here, and it's going to come in. You can see it comes in with this reaction low. There's a couple candles right in there, couple in there. So at this point in time, that should be it. That's I use that term momentum fueled overshoot, and I use the analogy, pitcher throwing a 90-mile-an-hour fastball, hits the catcher's glove, his wrist snaps back, the glove snaps back, and then it springs back forward. So that's the overshoot. So it shouldn't, at this point, and it's technically a back test. So this is a critical junction. I'm doing this video. If they reject it on the back test, we have no business taking out that low today. If we do, we're probably going to go down to the next support. That's about 471.92. And then we're going to print a daily close below this trend line, on that daily chart. And that's going to be pretty bearish. And then it's going to increase the odds this market could just kind of collapse. Like I said, I'm trying to pick up some nickels in front of a steamroller first, but if I need to be back on the other side of the trade because that's what the market tells me to do, that's what I will do. All right, we will wrap it up here, and I'll get the video out to you. And if anything changes, I will either put something in the comments section under this post, including any charts, or I'll get another homepage post out to you. This has been Randy Finney with Right Side of the Chart. Have a great